So what are the chances that this is simply a bear flag? Well, I think the chances are better than 50-50. The bear breakout has failed, and we're going to try again to get above the moving average. Bulls still have not yet done enough to convince traders that the bear trend, the bear channel has ended. But whenever the market tries 4 or 5 times to get above the moving average, and every failure lasts only a bar or 2 or 3, the odds are the bulls eventually will be successful. So I do think at this point the bears had their chance 34, failed. So I do think we will break above the moving average and stay above it for 10 bars or so. The target, whenever you're in a bear channel, is each prior lower high, 1, 2, 3. This is also a type of a wedge. You have a double bottom bear breakout. So 3 pushes down, 1, 2, 3. So the double bottom creates the first 2 pushes, and then the failed bear breakout, the 3rd push. The reversals up have just not been strong. Bar 20, bar 29, 31, 38. The bars are just not big enough, and they have not yet had follow through. Bears, when you're in a bear channel, the bears sell every close of every big bull trend bar right below the moving average, at least for a scalp. So bears are selling this. I'm currently flat, but I'm more inclined to buy because 38 is a good enough reversal to make me think the bears lost control. But the bulls really got to get above the moving average. So buyers or sellers below 38, 39. For the bears, it's a swing sell for a bear channel. The bears should not have allowed 35, and then they should not have allowed 4 bars up. They should not have allowed 38 to close above the 37 high. So this is interesting, 39. Will the bulls get a gap? 39 low, 37 high. If they do, it would be a subtle sign that the bulls are taking control. The entire sell-off does not look very strong. It's probably a bear leg in a trading range. Trading range has to have at least 1 bear leg and 1 bull leg. We've had the bear leg. I don't think this is enough of a bull leg, so I think that we're going to get a bull leg. But so far, the bulls are continuing to fail to do what they need to do to make traders believe they have taken control. Would I buy or sell 39, a failure at the moving average? I would not sell it. The bears had terrible follow-through, 35, and then they allowed the bull breakout, 38. So all I would do here is buy or wait. We're so close to the moving average, and the bulls have failed at the moving average for 3 hours. Makes me hesitant to buy this close to the moving average. But I'm ready to buy if we start to break strongly above the moving average. If you noticed, I was starting to get a little bullish over here, and then I was bearish over here, and then bullish again. I don't have any problems changing my mind. And sometimes I'll change my mind several times in the course of a minute. And I don't have any difficulty with that at all. I just make an assessment of what is in front of me, and then I decide whether it's reliable enough for me to place a trade. If it's not, I wait. Right now, I'm waiting. And I don't view it as, oh, Al, you're so stupid. You know, you thought it was becoming long on 31 and short on 34 and long on 38. You don't know what you're doing. I don't think of it that way. I think of it as the market's telling me that it lacks direction. Everyone wants a trend. Most of the time, you do not get a clear, strong trend. And a lot of times, you get this. Every 2 or 3 bars, it reverses. So I don't view it as me being wrong. I just view it as the market unable to sustain a move one way or the other. One of the attempts is going to be successful. Just like I've been saying for 2 years now, that one of the breakout attempts, here's the weekly chart, one of the breakout attempts will be successful, but any one of them is probably going to fail, 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 fail.